take a look at the gold prices holding around that 1350 mark. The bullion is headed for a fifth weekly gain as tensions between Ukraine and Russia keep the gold's safe haven status intact. The crude oil prices in the meanwhile also have rebounded, at least in the day-to-day, and you have seen gains coming in as worsening diplomatic relations between Ukraine and key oil producer Russia yet again stoke supply fears here too. Vijay, would you say that the safe haven buying is coming back, at least in these two tangible commodities, because of that?
Absolutely, Manisha. The traders are now largely driven by news rather than any other factors. And as and when diplomacy starts to fail or succeed in its efforts, you will see these large price swings in these commodities, both energy and bullion. As far as levels are concerned, should everything else remain constant, the 62.75 to 62.80 levels as we speak at this moment would remain pressure points for crude oil on the MCX WTI prompt month futures. And where gold is concerned, I would think 30,400, which I talked about yesterday and day before, will remain the immediate upside hurdle. Where silver is concerned, I think 48,000, 48,200 will remain a stiff resistance on the upside. If you see the situation in Ukraine cooling off a little, the downswing might resume all over again. So it all basically is news-driven. Traders will basically react to news rather than trying to second-guess and preempt the market, because they would rather let the news come out in the open and then take their positions.
And especially when it is an uncertain market, the weekend volumes, of course, tend to dip as well, which we have seen in the market today. Vijay, how would you look at the base metal space? Because the Chinese numbers have not been so good. You have the European inflation numbers back on radar. And, of course, as we talk, we are awaiting those non-farm payroll data from U.S.
Manisha, for quite a few weeks now, I've been saying that the trading terminal screens are not indicating any kind of exuberance or hurry on the part of traders to go out and buy. Now, take a look at copper, which is supposed to be the benchmark bellwether kind of industrial metal. It's down almost 2%. Aluminium is down 0.5%. Nickel is unable to rally. It's down 0.5% also. The other ancillary metals are also showing signs of weakness. Zinc is down almost 1.75%. These are all indications of traders being very, very cautious. Now, unless you see the buying exuberance coming in, where traders start feeling if they don't buy now, they might have to pay a higher price down one or two trading sessions later, I don't see how you should be throwing your might on the long side. I would still remain off the long positions in industrial metals.
Would want to point out those flashes on your screens there. The Financial Technologies is ready to sell 24% stake in MCX. Remember, that has been going for the longest time. That is as per the directive that has come in from the Forward Market Commission. And they have now appointed JM Financial as the financial advisor for 24% stake sale in MCX. Remember, they already have given 120 days to complete this stake sale. And this is the latest information coming in for that. So JM Financial now has been appointed as an advisor for that news there. But coming back to the agro space, and we have seen very strong gains coming in for Mentha, almost an upper circuit on the near-month futures there, Vijay.
Absolutely, Manisha. This is a very surprise move, and after the kind of extended weakness that we saw in Mentha, there is a very strong pullback rally. If this upthrust is likely to have legs and follow-up buying comes in, I would feel that the 870 to 880 levels might also become possible in the coming week. Although this is a counter-cyclical rally at this part of the year, when the summer is almost upon us, Mentha, by rising at this point in time, is making a very bizarre move. I would not want to buy Mentha, but any kind of a very strong and upthrust which is not backed by market internals, which means higher volumes, or the open interest does not really rally too much on the upthrust, I would seek short selling opportunities. I would not want to buy Mentha at this point in time at all.
Well, you're correct. It's a very counter-cyclical move, but we have seen 4% of gains in Mentha today and nearly 8% up in this week itself. Vijay, the potato prices, we were talking about them yesterday, and there have been lots of rumors in the market about a bad weather and bad crop as well, but most people point it out as speculation, and we have seen this huge difference between the spot and future markets also.
You're right, Manisha, and I have been maintaining that the March futures are likely to run into resistance close to the 1200, 1225 levels. I would still hold on to that view. And I would also repeatedly point out that the action is just not in the March month futures. The action is actually percolating down to July, August and September futures, even though the traded volumes are very thin there. Now, if you see the cost of carry, the March month futures are now closed at 1185, whereas July is at 1392, August at 1437, September at 1457. Now, this kind of cost of carry is just not sustainable. So, once you see the March month futures expiring and April month coming in, this kind of huge yawning gap in the prices is likely to narrow down. So, if at all you are trying to take a short position in potatoes, which I think you should, at higher levels of 1220 plus. The benchmark rate of 1220 will be March, but your action or your trade initiation should be in July or beyond.
Very quick, a last word also on the sugar prices. How would you want to look at that?
I'm extremely pleased, Manisha. Sugar has started to finally behave like we have been discussing about for at least 2 months now. And I would still hold on to my view that 29.50 to 29.75 is still on the cards by the end of April.